Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 30th of April. And starting off with the FTSE 100, where it's still rather strange that after weeks of us being told by the great and the good that the London stock market's finished, it's heading for new highs, record highs almost every day. Current situation is we're looking for 82.30, which is the top of that December rising trend channel, while we're above the old April resistance, 80.44. Above 82.30 on an end-of-day close basis, looking for 8500, perhaps as soon as the end of next month, which is the top of that rising trend channel from back in 2007. If we do break back below 80.44, then there's a risk of going down to 78.80, but we're not expecting anything worse than that at the moment. Next on the list is the DAX, and here we can see that market not doing as well as the FTSE, actually it's stalling around the 18,200 level. Support hopefully at the floor of that rising October trend channel at 17,800. Below that, then obviously there's the risk of retesting March support, 17,600. But hopefully this is just a near-term consolidation. We've had a bit of a failure in the upper 50s with the RSI, which is not great, but we're still above neutral 50. So the bulls still just about have it. Moving along to the Dow, and here we've had actually a gap close buy signal, so we're closing above the gap down that we had last week on the 24th. The top of the gap there around 38,500, and above that we're looking for the 50-day line at 38,800. But let's see if we can get there first before getting too excited about retesting the highs of the year. Moving along to Bitcoin, which yesterday was looking a bit tired, let's say, but here we've got the chance, still the chance of heading down to that March support line projection, 58,500. We were suspecting that even before the failure at the 50-day moving average that we had just a couple of weeks ago. A resistance line there from March is also there around 67, 68,000. But in the near term, 65,000, the level to break, and we've had a key reversal down earlier today. So 65,000, the block on the market. Below that, looking for 58,500 or so, but hopefully nothing worse than that on the cards at the moment. Moving on to gold, and here nestled within this rising trend channel from February, the floor of the channel there around 23.30, and above that we're looking for a retest of last month's, the April record high there near 24.40 by the end of next month. The peak earlier this month, 24.48. Moving on to the stocks, and it's all change at Avacta, where we've got a new CEO, which is obviously very, very exciting. Here you can see that we managed to avoid going below that support line projection from February. That's now actually at 43. It was at 45 when the market bounced off it. We broke a line of resistance there from the early part of the year, from the beginning of February, and that level there around 45 is still a key level. The situation now, though, is it looks as though we've had a bit of a block here just above 50 pence. So if you are a bull of the stock, you want to see an end-of-day close above 50 to give us initially the 50-day moving average at 56 pence, and then best case at the moment would be up to 59 pence at the top of that broadening triangle from March. At the moment, we really do not want to see this market go back below 43 pence, and let's see if we have to project the shares down after that. But at the moment, still in that sub-50 support zone. Moving on to a stock which has actually done what we wanted it to do over the near term. It's CleanTech Lithium. Here we had the inkling that the shares were ready for a rebound. We had a strong candle there. We had a support line projection there from back in January. Broke above the 50-day moving average about a week ago, and initial target here was around 16 pence at that February resistance line. Second target here around 22 pence, which hopefully is just a day or two away. And then the third target, the logical place for the stock to go, is up to the top of that November gap at 25 pence. So hopefully we can get 25 pence over the next couple of weeks or so. Upside valid while we hold above the recent neckline resistance at 17 pence. Onto a stock which I don't think I've ever covered, which is obviously very exciting. Here we've got James Cropper, which is trying to emerge from a bear trap island reversal, so gapping down massively in January and then gapping up now through the 50-day line. Above that 50-day line at 284, we're looking for the top of that rising trend channel base at 400 pence, perhaps as soon as the end of next month. Ideally, we stay above the initial April resistance at 3 pence, so £3 rather. So above 3, looking for 4, rather simply on James Cropper. Another stock which may be about to rehabilitate itself is Corel, and here looks like there's been a bear trap from below the September-October support there. That was around 0.36. Above that, we're looking for the 50-day, the 200-day moving average there at 0.54, and then the 50-day line 0.62. Perhaps we could get the 200-day line by the end of next month, or even sooner. The reason for the excitement here on a technical basis is that, as well as a bear trap, we've had a gap higher, so it's a bear trap gap reversal, which is one of our favorite setups, as is the bullish divergence, so a lower low from mid-April, but a higher RSI trace. So we've got all the signals going there. So ideally, we get up to the 200-day line relatively quickly after that rug pull from the beginning of the year. Another stock which has behaved itself is European Metals, and here we've got this sort of U-shaped bull flag, as I call it. Initial target here was 23 pence, so hopefully we'll get that before the end of the week. Next target for fans of the shares is up to 33 pence, the upper parallel of that red resistance line projection from December, and that is giving us a potential 33 pence target. Ideally, we stay on the right side of 20 pence for a 33 pence target by the end of next month. I think if you look closely today, we've had an unfilled gap to the upside, which is also a positive on that situation. Celebrations in order for some with Eco Atlantic, and here we've hit our first target there, which was up to 11 pence. I think I was goaded into this one by somebody who suggested that it's better that if I look at these things before they move rather than after. But here we've got our first target there, 11 pence, and second target, hopefully over the next week or two or sooner, up to 13 pence. If you're a fan of the shares and looking for the a full recovery, a full-blooded recovery, it will be the line that I'm about to draw at the moment, which is from back in June last year, which is heading for 19 or even 20 pence, but perhaps we wait for the end of June for that kind of excitement, as it is early days yet. Global Petroleum is next, and here you can see that we may have a third attempt at clearing that resistance line there from back in October. Basically, it's a rising trend channel base. We're already through the 50-day line at 0.7.5, and above the 200-day moving average on an end-of-day close basis at around 0.1 pence, looking for 0.22 by the end of next month or even sooner, especially the way things are going at the moment. Been plenty of false dawns in the next stock, Greatland Gold. I'm hoping that some point soon the shares will actually respond to the rising gold price, because they haven't done that so far. The good thing about this setup here, though, is that broken a line of resistance there at 5 3/4 pence, and above that looking for the 200-day moving average area at 7.3 pence, and the top of that broadening triangle from February by the end of next month. And we're looking for that even if the shares do what they've done in the recent past, which is then get sold into. The other point to note is the 5.7 pence level. That was last year's support. We really need to stay above that even on dips now. Luckily, that is also the trend line, the December trend line level as well. So above 5.7, looking for 7.3, 7.4. Another stock which I don't normally look at, but I think there's a good update from the company today, is IG Design. And even though it's gone up a long way already, we're actually very near the top of that rising trend channel from back in July. An end of day close above that, around the 170 level, and we could be looking at the upper parallel of that particular trend channel, and that's heading for £2.25, and that could be on its way by the end of next month. About the way that things are going, it could be done by the end of this week, but let's go for a more conservative analysis there. In terms of a stop loss, ideally we stay on the right side of £1.50, as that was late January resistance for the shares. Another stock which I don't normally look at, but I'm looking at today because it's got an unbelievable setup here, gapping down and then gapping up again, and basically a sort of U-shaped turnaround here. An end-of-day close above the 50-day moving average at 42 pence, whether it's today or tomorrow, could take the shares up to 52 pence at the top of that broadening triangle from last August, although obviously this is one of those stocks where there's probably a massive spread and it's probably very illiquid as well. Ideally, we stay on the right side of the old June low there at 37 mid, if you are so minded. Moving on to Transense, which is also looking interesting at the moment. Bear trap gap reversal from below the August support there at 96 pence. Above that, we're looking for the top of the rising trend channel from back in May last year, as high as £1.23 by the end of May this year. So let's see if that stock steps up to the plate. There have been many false dawns in United Oil and Gas, but this looks like a convincing turnaround at the moment, with key reversal to the upside yesterday off the lows, and a nice clear candle today. End of day close above the 50-day line at 0.22. Could take the shares up to 0.31 over the next 2 to 4 weeks, and that would also basically fill the gap down that we had from February. So maybe there's a change there at UOG. The key here is to stay above that old February support there at 0.2 pence as much as we can. On to the last three. First one is Webis, which I look at now and again. Here we've had a double unfilled gap to the upside, and just touching the 200-day moving average at 1.3 pence. Above that, on an end-of-day close basis, looking for 2 pence by the end of next month. Punchy call, but as you can see from previous price action, the shares do have a habit of spiking up, even if they then later spike down. On to Zoo, which is also looking encouraging. It's got one of our favorite setups, well, actually a couple of them, in fact. We've got the bear trap gap reversal, which we had last month, so we're heading for a new low, and then gapping up, unfilled gap, and then also consolidating above a rising 50-day line. Sideways shuffle, as I call it. End of day close through 40 pence, and we could be up to 60 pence by the end of next month. Ideally, obviously, we stay above recent support at 35 pence in the meantime, and the RSI stays above neutral 50, which it is doing rather well at the moment. Finishing off with Zinnwald, and here we've got the shares hitting our first target. This was also a sideways shuffle above a rising 50-day line. Initial target here, 7 pence. Above that, we're looking for 8.7 pence, hopefully over the next couple of weeks, and then that would hopefully give us a proper long-lasting revival. That's it from me today. More updates tomorrow.